this kind of volunteerism at the same time, which is probably unrealistic. Yeah.
Basically, every country in the developed world actually holds a large reserve of U.S. dollars that they need to use when they want to do trades.
It seems like we're gonna have to go to the Mysterium.
But you don't think that there are how many nations on Earth?
It's like 200 or 300.
How many nations
I was
have
going to
their
say
own currency?
189.
How many nations have their own currency?
All
Most
of
of them, except
Most
for
of
the
them.
EU.
You don't think that? Well, there are nations in the EU that have their own currency, but you don't think that these you don't think that if nations can do this, and we know how terribly inefficient nations are when it comes to doing anything, you don't think small businesses or even small banks in let's say even the United States, if the United States became apolitical, you don't think that there are companies that could come together or even banks that could come together and even have an outlined exchange rate based on what backs their currency? You don't think that's possible? Because that's how it was, in a lot of places. You could you could have a similar currency, or even you could come together and have a currency backed, or even then you could just default to coins, and coins would be
You're talking
universal.
about the Federal Reserve.
What do you mean?
The Federal Reserve
Federal
is
Reserve
a bunch
didn't
of
exist
banks coming together in order to
that's not true at
regulate
all.
a currency.
That's not true.
What's not true?
The Federal Reserve was created to, quote unquote, help prevent banks from failing. Even then, it didn't do that.
But it's a banking cooperative.
Okay.
Yeah,
and what application or how does it operate?
The way it operates is that every bank basically needs to buy shares from it.
And then they have a seat on a board by region. Isn't it regional?
Are you an apologist for fractional reserve banking?
Me?
No, the guy.
How?
I'm asking you.
I'm an ANCAP. No, I'm a volunteerist. I hate fractional reserve banking. Is absolutely stupid.
Okay, I agree with you.
It actually does help with growth.
Well, yeah, that's exactly what I was going to say. Yeah.
It can hardly be voluntary anyway. No one in their right mind.
You can choose to use a bank or not.
But again, no one now you can't. It's mandated. Like if you want to go to a bank, it's going to be a fractional reserve bank in the United States.
Could someone send me an invite?
Actually, well, you could use. Aren't those cooperative banks? What are they called? Community-owned banks.
You know what fractional reserve means, right?
Yes, they have a currency they have to hold in reserve where they can loan out a ratio to how much.
Effectively, if you deposit your money with them, it's guaranteed they will loan your money out, and they don't necessarily have to have that money on them at all times. Yeah. So they're going to loan out a portion of your money.
A fraction. Yeah, they only have to have a fraction, but they can loan out.
So they're effectively they're able to they are able
ratio to how much they actually have in the accounts.
Yes, that means they are actually able to loan out money that they don't have.
Yes, the loan is creation of wealth that they don't have. Look, but listen, aren't there types of banks that are these community banks that are owned by the people that use the bank? What's the name of these banks? I got to look it up. I think they exist. There's a type of bank where they don't have this thing. I don't know if how fractional they are. They are the community. Right?
Oh, they still use fractional reserve banking, and they still need to be part of the Federal Reserve.
But don't they have aren't the ratios different, much different?
I don't know if the fractional reserve ratio is different or not.
I think it is. I know there's a regulatory requirement, but I think because of how they're created, it is different. Like how they sell themselves to the community.
I believe that there were some things you can do if you're not a part of FISA. I think that's what we're talking about.
Yeah, I just have to look into it. I've seen commercials for them, but it didn't appeal to me, so I didn't dig in. But I think that is what it was. And there's also banks that are by industry. There's some banks that just focus on helping Like there's one for government employees, and they're actually non-standard as well. But I
Yeah,
forget
but that's
exactly.
hard. But yeah, that's Hardland example. You have effectively a government-run bank that's protected from markets by itself.
So what are
That's
those
Hardland
called?
example. I don't know what it's called, but that's Hardland example. There's no competition. It's
But they're
almost
big.
it doesn't matter. But that's almost like saying, oh well, look at the look at these trade unions that are completely protected by the government. They have taken over the state. They don't have to have any type of competition. You have to be a part of it when you join. And then saying, oh well, look at this outlier when it's
Credit union. Sorry, I just found the name. The credit union. These credit unions. There's the USAA, the Navy Federal Credit Union. That was the big one. I lived in D.C. for a long time, and they were everywhere. The Navy Federal Credit Union, and of course, they were for the military.
yeah.
I
But
have
again,
such a-
it's you have a highly protected part of the market. These type of banks, which don't see any type of competition, are completely protected by the government from any type of competition.
Yeah,
Well,
that's a
you can
problem
use
of corruption, though.
you can use other banks. You're not required to. It's just that the benefits are so large. I mean, I think you even get like your first loan for your home is a free loan.
So then,
Yeah.
how does another
It's a no interest loan.
how would another
No,
bank
it's
compete
not.
with that?
The low end.
Let's just say it's one of those like first time buyer loans where it's an extremely low percentage. Let's just say it's
Yes.
like 2.5% APR. Let's say it's really low, or 2.0. That's a pretty low percentage loan for a home, because most of them are like 3%, 4%.
Yeah.
How is another bank going to compete with that? If it's not
Yeah.
if it's not, that's not even remotely a good
What's
thing
wrong
to
with
talk
that?
about. What?
So what's the problem with that?
No, the
What?
interest rate is lower than inflation. That doesn't make any sense. The only way it works is through government subsidies.
Yeah, and lower those artificially lower inflation rates hurt because it's causing capital to accumulate out of thin air, which is the reason why we have inflation in the first place, is money being printed out of thin air outside of the bounds of growth. Which again, that's one of the reasons we saw in 1819. We saw banks we had an enormous outstanding loan or problem with notes. Here, I'll pull up the source. I'll pull up the specific.
I mean, not long ago, weren't they dealing with a 0% interest rate?
That's really bad. Even in just the New England banks, which is where the government can find, the quote Bank of America. From 1811 to 1815, the outstanding notes increased from 2.4 to 2.7 million dollars worth of outstanding notes, and the specie in the banks increased by 2 million from 1.5 to 3.5 million in the same period.
I believe that inflation rate is for the federal bonds. The actual price index inflation rate is different.
No, I'm talking about what happened in 1819, like that period.
I'm
The
addressing
math,
the 0% inflation rate in the U.S.
yeah.
That's, by the way, the guy who said that they're not free loans, you were right. They're not free loans. They're no down payment
Yeah.
required loans.
And
Sorry
now
about
there
that.
are banks that offer that, but they're no down payment, but they are higher interest rates on some of them.
Well, they'll rate match any lowest rate you find, but they don't. But it is a deal. I mean, it is something special that they get the Navy Federal Credit Union I'm looking at. But as I understand, they all have something like this. I dated a girl. She was a dependent, and she got the same benefit. So it's like you get it as a member, and then all your family gets it. So it's how many people are in the military, and then how many people are government workers. It's a pretty big group who has this
They
benefit,
probably have lower interest rates on a lot of stuff like credit cards.
right?
Well, what they have is they have fixed. Most banks have a variable rate that'll vary over time.
I think how they get away
Unless
with it is-
if you lock yourself into a fixed rate, the rate's going to be a little bit higher, but it won't go any higher. Whereas if you have a variable rate, if your credit starts tanking, and other things factoring in the market, that rate could change.
I think what they rely on is that they look at the demographics of a government employee, civil or military, and they think, okay, this person is probably at least going to be in until they get their pension. you know, so they got a job and their employer is not going to fire them. That's going to be a rare, or the employer itself is not going to go under, right? So I think that the pool of their consumers is just radically different than one of these non-governmentally associated banks.
A variable interest rate often leads to predatory lending practices where they just hike up your
right after you get it.
yeah, it's fucked up.
That's why credit unions kind of have like an unfair part in the market, because they only offer fixed rates, and they can typically be a little bit lower than what other banks can offer. And these are all backed usually by the government in some way. They're subsidized in somewhat in some part, and it's not really a practice of a fair free market.
So that's okay, right? I mean,
No, it's
the
not.
banks. Well,
The thing is,
the banks are regulated. I mean, the banks are top-down controlled at some level. So, are we pretending it's a free market? It's a regulated market already.
No, yeah, we haven't had a free market in this nation yet.
So why not back the banks up? What's the problem with that?
Because it creates problems like we have now with
thing
with
is
the
that
artificially low inflation, the artificially low interest rates, which doesn't directly correlate with inflation, therefore artificially creating wealth that doesn't exist. And what happens when you have inflation that outpaces growth? You have, like we have now, a 98% depreciated dollar, which has hardly any buying power compared to what it used to. Thus, people try and cry and moan, oh, the rich get rich and the poor get poor, which if that was the case, then our nation would have quit a long time ago. That doesn't make any sense. But the disparity between inflation rates, interest rates, and growth of wages there's a problem with that. And that's because of rampant inflation. The wages can't keep up. Because of things in the United States that artificially keep prices down or up, like orange juice is a good one. You know that 40% of oranges that are grown are forcibly removed from the market and just not allowed to be sold to keep prices high. Same happens with almost any kind of produce. They're artificially high. Artificially high pricing is, quote, to save farmers. Well, we saw this in the 1930s, where the farmers were actually paid and subsidized to grow wheat, vegetables, food, and they were forced to destroy it or not sell it, right? They weren't allowed to sell it. The government came and actually forcibly destroyed this stuff. And even in one instance, 6 million pigs were slaughtered, and the farmers were not allowed to sell the meat to keep the price artificially high. It's absolutely insane. And this happens today. It's absolutely insane.
That's a legacy problem.
And they do it today.
Right, but but it's a problem that it's a system we've inherited. So then you're dealing with the same, honestly, it has a very similar corollary to why they didn't want to automatically just end the slave economy after they won the revolution. They said it wouldn't be fair to all the people that currently have farms, and it would just throw them into disarray, and they'd have to, so they just said, you know what, we just won't touch it for now. And they made some compromises and kept it for a while. And it's the same thing. So here we are with this huge farm class that are essentially, through, like you're saying, the tweaks in the market, being allowed to have a market because, for example, with the oranges, it's very interesting that they're actually dumping them.
They're marked for not for sale. 40% of the oranges grown are not allowed to be sold on market to people. They can't be.
But they want to keep the capacity of the orange growing anyways.
Yes. Again, the farmers are being subsidized not to sell them.
Right. So this is a holdover. So I agree. That's bad because.
Just to tie this back in,
these are capacity. Does it have to be there? Do we have to keep it?
No.
So again, this stems in to this. These aren't helping the farmers. None of this is actually helping the farmers. Because again, we saw in 1933, 2 million farmhands go out of work because of the practices of the government trying to do this, trying to, quote, save the farmer. When 2 million farmhands were then out of business because they were not allowed to farm.
Interesting.
And then all this land goes barren, and then bam, Dust Bowl. They tried and blame the Dust Bowl on some natural event when it was partially created by the government, causing all these problems, destroying, millions upon millions of acres of farmland. And then that farmland is no
Wasn't
longer allowed to be farmed because of the subsidies. These farmers are being paid not to farm them. Why would they farm them if they're being paid just as much to not farm them? And then
the
you had
Dust
barren...
Bowl related to the war?
No, the Dust Bowl happened in like 32 or 33. You saw a massive drop in farmland and farm usage, and then all of a sudden, all these terrible farm practices, just kind of the problems they were causing, just exploded because the farmland wasn't even used anymore. There was nothing to hold down, all that land. So, bam, you have massive problems of erosion.
Okay,
That's going to happen.
We have to find this ancient rock, and then we can make.
I mean, if we have that much wasted food, we can probably raise tariffs on food and still be fine.
Or you allow the farmers to just sell it so the price remains low, so that rampant inflation doesn't cause massive starvation. When you have rampant inflation, the value of the dollar drops way down, right?
If you have that
And
much,
then- and then what happens-
But isn't the prices of the food goes way too low?
But that wasn't the problem. They were trying to keep the food prices artificially high, like on the high end of the market. And then no one could afford the food. So it hurt regardless, and farmhands went out of business. So they just completely nuked the agricultural economy in the United States in 32 and 33.
Well,
It
now
was
I'm
bad.
talking-
And
now
they're still
talking
doing
about
it. And they're still doing it.
prices, so they're low, and then they're worried about a currency war after a trade.
Hello, economics. Hello.
We can hear
Yes,
you.
yes, welcome.
What's the issue?
We're just talking about how the United States screwed over the farmers in the 1930s during the Great Depression, thus resulting in the at least partially blamed for the Dust Bowl.
Fuck the farmers, am I right, boys?
Yeah, who needs food, right? Yeah, screw them.
Fuck food, bro. We have McDonald's.
Problem is we're not growing food.
You call that food?
Well, technically, the cheapest calorie you can buy is McDonald's double cheeseburger. It provides like 650 calories for $1.50. It's the cheapest calorie you can buy. So if you have massive starvation, just give them McDonald's cheeseburgers. They'll be fine. It's not false. It's not. Health-wise or not, calorie is a calorie, and you need calories to survive. And as long as you're working those calories off, and you at least vary your diet somewhat, it's not that big of a problem as long as you're burning it, all the crap you're eating.
But on the
Who's this?
banks, though,
Idiots.
We can talk about how the Federal Reserve caused the Great Depression to happen.
oh yes, that would be excellent.
Okay, well, we know the first instance. We can actually boil it down to a single bank, the Bank of America in New York City. They were starting to have people like, oh, well, look at all these banks. We're not gonna have money, like with the media scaring people like they normally do. And we actually had the Federal Reserve start getting this money banks because this bank was in the news. And day one, people were given small bills actually to kind of show that, oh, look, we have a lot of money. Don't worry about it. And they'd line out the door all day. Second day, Federal Reserve shows up more money, and they're like, yeah, we'll be fine. By lunchtime, they're out of money, and the Federal Reserve's like, yeah, no, you're just gonna have to close. And this is kind of what happened all over eastern United States initially. Banks just started closing left and right, and then by I think middle of 33, you see about a third of the monetary supply and a third of banks close. And the Federal Reserve didn't really try and stop it. They just let it happen.
Wasn't the Great Depression caused by a high inflation? Like, it was a systematic high inflation which caused people to just invest like hell.
So that's how recessions are. Is when you have when you have inflation that kind of goes out of control a little bit, you have periods of recessions, which is how our monetary system works. You have planned periods of recessions, which are good. Recessions are when people. So the way that I explain it is, think about it like this, because you see an economy, and then the government artificially inflates one part of the economy. This always happens. You can always boil it down to the government causing this. So let's say you have a restaurant owner and a circus comes in town, And then the restaurant owner says, "Oh man, I got a lot of business, right?" So what does he do? He invests his capital into an addition to the restaurant, to accommodate more people, and he hires extra staff. Well, what happens when when the carnival leaves town? Where's his capital? Where's his artificial capital gone now?
Oh wait,
It's gone. The capital's gone. The artificial capital, which is where the government was like kind of trying giving those banks those loans or things like quantitative easing, all that stuff. That capital's now gone, and these businesses are now having to recoup because they had bad business practices, which isn't something bad in the economy. It happens all the time and it's planned. These businesses will then try and recoup their losses through the form of recession. They will try and liquidate whatever they can. They'll have to fire some people, and then the economy will recover. It always happens.
Huh?
yeah, but the problem is that upward movement of wealth from the bottom of the classes all the way to the small percentage of people at the very top. And that happens over and over again.
I thought the Great Depression was caused by it's like what do you call it? A speculative lending and a bubble in the stocks.
Those are again all recession related. When it turned into a depression was when banks started closing doors and a third of the monetary supply disappeared from the market. That's when the depression started. That's a bad thing.
But you
The
can't
Federal
just
Reserve-
have the bubble go on forever.
Oh yeah, it's gonna pop. Bubbles always pop. They
It's
always
designed
they
to.
always pop. But
And if you keep lending, the bubble will get bigger and bigger.
yes, and then that's why the government was letting it get bigger and bigger. If you stop unnecessary inflation, then the bubble pops quicker. We saw this in 2008 with the housing bubble, because in 2001 we had a recession, right? Why didn't in a recession all markets are affected, regardless of how small, it's measurably affected. How come in 2001 the housing market was unaffected?
Loans.
Because the government was artificially pumping it. And then people got the wrong idea because the government was doing this behind closed doors. Oh, we just all need to invest in the housing market because the housing market's unaffected by recessions. And then what happens as a result? An enormous bubble pops. The average median household income goes from $125,000 down to $84,000 in just a couple years. Like, it's bad. The problem with this is people were getting loans they couldn't afford. The banks were just giving loans out to people that were actually unqualified. But the Federal Reserve, via Fannie Mae and Freddie Mac, were just pumping these loans out and saying, yeah, we'll insure the banks. And then they never actually did insure the banks. The banks just collapsed, and you see things like AIG happen.
You can't ensure a total collapse.
Yeah, well, and that's the Federal Reserve. The Federal Reserve forced this to happen for no apparent reason. Well,
Because
reason
they
that we
want to
know
pull
of.
up that resources that are liquidated in order to pay off the debts. Because you pull out the money, you pull out the debt, and then you retract it after interest gets too high, and you take the possessions.
Which all this could have been prevented.
Well, the problem is, like with the Federal Reserve and all banks, is that they're private interest. They're public discretionary money, right? Because we all use banks. We all put our money into the banks, including the Federal Reserve. But the actual money itself is used by people that we have no say over in terms of their decision making.
Absolutely.
Hence the recessions. It's a horrible system.
Which Murray Rothbard and Milton Friedman, both of them actually go into great detail in many of their speeches and books and papers on how our monetary system's absolutely screwed.
Yeah, and we're in a huge bubble right now. Like all the bubbles. We're in the credit bubble, the housing bubble, the student loan bubble, the housing debt bubble. Lots of bubbles.
Yeah. Well, the student loan, it's funny because if they taught basic econ in high school, we wouldn't have a credit or a loan bubble like we have. But they don't teach economics in high school. I don't understand why. It's easy to learn. Especially you take two classes, take a macro and micro class in high school, and you won't have to worry about those credit loan problems. You actually be able to discern for yourself what is the best route to go. And what people don't realize is the government's causing all these bubbles to happen because people argue that like capitalism and stuff is short-sighted, when in reality that's complete opposite. capitalism
Exactly.
via premise actually looks out in the long run.
Yeah, it's
When
another
government oversight is what causes short run problems, like we have now.
Your weapons level.
What they do is they have people wonder why college is so expensive now. College 50 years ago it was nothing in comparison to price now. The only difference now is that you have enormous subsidies on college, so they can artificially flex their price and get it higher and higher and higher. And along with rampant inflation, price is going to skyrocket. That's just how it is.
Yeah. People don't understand exponential equations because they see a linear trend, but that linear trend is a linear trend, which is a linear trend, and so it gets steeper and steeper, but we don't see that at the beginning.
Come on, give me
Yeah.
some
If you were to eliminate subsidies on colleges, people think that no one could go to college, but that's not how business works. If you were to get rid of all these subsidies over time, because Milton Friedman had a good one. He said he would end things like tariffs and stuff. He'd have a 5-year plan. He'd start at 80%, 20% reduction every year for 5 years. And that way the market can adjust, because the market can adjust very quickly. It usually does.
Yeah.
If you were to have a 20% reduction on tariffs and subsidies, give it 5 years, 20% a year, the market will adjust properly. Inflation, you'll see a massive reduction in inflation as well, because you don't have tens of billions of dollars being artificially pumped into the economy that doesn't actually exist. None of this money actually exists.
So what kind of taxes are you saying we should reduce?
Oh no, tariffs and subsidies.
Tariffs.
Oh no, I think we should have we shouldn't even have an income tax. That's another problem with inflation. Income tax is another part of artificial inflation. If anything, the only ethical tax, in my opinion, would be, which I don't agree taxes at all, but if you were to have some kind of tax and you had to have one, you could have a consumption tax, like a 15% consumption tax or 20% consumption tax.
What about a
how-
land tax?
A what?
So how would government function?
Massively reducing its overreach, like it should.
What if you want infrastructure?
You don't think do you know what percent of GDP infrastructure is?
No.
Let's go over this.
You're welcome.
Trying to find it for the United States.
And who will fund the military?
Well, we can talk about here. I won't even pull up the infrastructure GDP because we know our infrastructure GDP is less than 1%, less than 1% of spending.
Who will fund the military?
Most of our military spending isn't spent on the military. You know that, right? An enormous majority of it is spent on foreign aid and research projects that don't have any kind of fruition, and they're just being, marketers and stuff are just being paid off in closed circuit economies that we'll never see. People think that, oh look, private contractors are getting all this money from the military, and we're going to see that money. They have their own type of economy, secret, because all the money needs to be kept off the books. You're never going to see that money.
But the question is, who will fund it?
A consumption tax of 15% would be more than enough to fund any basic needs the government should provide. We can look at total expenditure in the United States.
Basically a sales tax, right?
That's what a consumption tax is. Why? So you know that taxes could be viewed as a penalty. Why are we penalizing by default income? Why are we?
What do they do?
We're effectively like triple taxing this crap. Why are we taxing the goods we produce, taxing the income on the people that work on them, and then re-taxing them as a sales tax? That doesn't make any sense.
Discretionary spending.
And then by default, we end up with, in reality, your income is in reality taxed 50 or 60% after all these taxes actually happen, not the 25 or 30% you see on your taxes when you get your return.
How will this affect income disparity?
Businesses have more capital to move around and hire more people. Typically, and there'd be way less unemployment, so the buying power of the dollar would go up.
Why would there be less unemployment?
Because businesses have more capital to move around, and the buying power of the dollar goes up. Therefore, the $8 wage you pay someone to work at a convenience store, that the power of that dollar goes up. So by default, you can hire more people. This would also coincide with eliminating things like the minimum wage law, stuff like that. That kind of stuff.
But the
would
thing
all
is,
be
businesses don't
eliminated.
hire people because they can. They hire them because they need them.
Yes, and what happens when the power of the dollar goes up? More people spend money because that dollar the value of that dollar has gone up. What happens to demand when the value of the currency goes up? The demand increases. What drives an economy? Demand. When there's a higher demand, supply follows. That's Econ 101. In a microeconomy, even macro, demand drives an economy. Therefore, the increased power of the dollar, on top of any kind of minimum wage law being abolished, which minimum wage laws themselves are actually hurt a lot of people, because those minimum wage laws take jobs from young people and give them to old people. You would have a decrease in unemployment, because real unemployment is in the 20 percentile, not 4% or 5%, whatever the government flexes, because people have just gave up looking for jobs and live on welfare, and they just don't look for unemployment anymore. And they can do this perpetually. That's why you see spikes of unemployment go up and down, up and down, up and down, because people have to have a certain amount of time where they're looking for jobs. They'll get a job, work for the allocated time, and then quit, or get themselves fired and go on unemployment again, or go in welfare again. It's a game people play.
The thing is, when wealthy people accumulate a lot of wealth, they tend to not spend it all.
That is incorrect. That is grossly incorrect. The wealth you see people accumulate is tied in via equity in businesses, in factories, in the economy.
Yeah.
That people don't sit on wealth, because if you sit on wealth on a fiat currency like ours, it loses its value very quickly. You have to constantly reinvest and move the money to keep its value. People don't Scrooge McDuck and sit on wealth. That's absolutely stupid.
Yeah, but
It's
the banks
all
own the
equity.
corporations, and they move the money between those two facilities through the labor of the people.
I didn't hear you cut out.
So you have banks that essentially own the corporations. Banks move money to corporations, and corporations move money to banks through the labor of the people. But they're owned by the same group, if that makes sense, like the same kind of entity, which is the bank itself.
But again, if you have all these massive drawbacks, if you take away all these drawbacks of regulation, then that disparity wouldn't be there like it is today.
If you got rid of minimum wage and these people make less money, even if that money does have higher buying power, they won't have the ability to spend it.
Absolutely, they would. What do you mean? Without the government forcing the prices of goods and stuff to be artificially high, and without rampant inflation, I don't think you understand what really happened in the 40s and 50s. You realize that doctors were paid, $10, $15 an hour at max. Like, these are surgeons being paid that much. Even in the late 70s, early 80s, you had people making $12,000 a year, able to support wife that didn't work, 3 children, and a home big enough for those 3 children, and they could send them to college, making $12,000 a year.
What are we talking about, man?
But you have to keep in mind, though, if you increase the amount of capital that these businesses have, they're going to take that capital, they're going to move it overseas where they can get cheaper labor at a much lower wage.
Again, that doesn't follow, because you would have less unemployment. Well, no, you would have more employment available here because there's no minimum wage.
Who's going to create those jobs?
They would move that capital.
The economy creates jobs.
That's like necessitating that capital outflows are necessarily directed to labor. Like,
Why aren't there jobs now?
Well, there are jobs. You can go out and get one.
Maybe
Yeah,
low
but
wage.
as you said, there's 20% unemployment.
Yeah, 15% of those people of that true unemployment have given up looking for work because it's more affordable, and you get more money from just sitting on welfare instead. Or they go to jail. I mean, because if you go to jail, you effectively make like $50,000 a year by just going to jaal. So.
That should probably be the
Well, the
Most big
surplus
businesses-
value. Sorry, go ahead, Drew.
Yeah, most big businesses, when we're talking about cash flows, like most big businesses aren't directing, the majority of, liquid capital to human capital. It's sort of there's other things that go into this type of stuff. It's like property, plant, equipment. So we're talking about like more
Yeah, because
more
this
illiquid,
bait
tangible
guy was
capital goods. Like,
this bait guy was trying to say that they just sit on their capital, and that's just absolutely wrong.
yeah, there's research and development. It's not just going towards labor.
And all that research and development is partially going to the labor itself. I mean, if you had drawbacks on
Wait, what do you mean?
well, if you do research and development, people have to get paid. All that's directly funded into people getting paid and resources bought.
Yeah.
But again, the disparity I think we're having here is that you think that without the government, when they actually enacted the minimum wage laws, you actually saw a large disparity occur. Because in 1948, unemployment for I think it's 1948, yeah. Unemployment for black youths ages 16 to 18 was only 9.8%. For white 16 to 18 it was 10.2. When you had minimum wage laws enacted, you saw a disparity forming in the minority community on jobs, because those were low-skilled jobs for people that didn't have skills. So all of a sudden, those low-skilled jobs were having to pay more and more and more, and they couldn't afford to hire as many people. And they would hire people that were overqualified to fill those jobs.
Oh, hello, Tiger. Go away.
So in reality, these unemployment laws have actually caused minority populations and communities to suffer greatly, because they weren't able to develop the skills like that happened in the Industrial Revolution in the early part of the 20th century. Through immigrants coming from Europe, Asia, South America. We didn't have a problem then, but because of unemployment, or not unemployment, my bad, because of minimum wage laws, you saw a disparity start, because no one could afford to hire them. Unskilled labor, or the best way to grow in an economy is to have generations that come in like they did back in the end of the 19th, beginning of the 20th century. They come in unskilled. They develop a skill in their lifetime, and then the next generation is set up pretty good, and then that generation set up pretty good. That wasn't allowed to happen for the minority population, for black people. That wasn't allowed because of the unemployment law, or minimum wage law. And then along with rampant inflation, wages couldn't even keep up with the economy, because typically when you have monetary, or when you have capital keep up with growth, that's good. You don't have really any inflation. And then when you have rampant inflation, when you have money being put in out of thin air, fractional reserve banking, which causes wealth to appear out of nowhere, the wages can't keep up, and we see this happening now.
Do you have an example of a country that practiced something even similar to this?
Similar to how the United States was in the 1940s and 50s?
No, something similar to using consumption-based taxes to run their country.
The United States.
We have a sales tax, and the sales tax does fund a lot of stuff. What I'm saying
Most of it
is,
comes from income tax, though. To be fair,
I'm sorry.
most of our tax funding comes from income tax.
Absolutely.
No, but the United States was ran on consumption tax before the 1900s.
Yeah, there wasn't an income tax, and we did pretty good for
Oh,
ourselves.
cool. I didn't know that.
But we switched to an income tax for a reason.
Because we
Yeah,
fought the war.
to fund our massive bloated government. That's why.
No, it was.
Heck, we
switched
saw.
to
Hold
income
on.
ta-
In 1920, from 1920 or 1919 to 1922, they lowered the. So we had a depression right after the war, 1918, 1919, or we had a depression start. The panic in 1920. We actually didn't see a depression, full form depression, come out of it because of President Hardin. He did good. What he did was they pushed forward legislation to roll back income tax. Income tax was drastically lowered. Regulations were lowered. And what happened? And the government didn't take any action. The economy boomed. Debt, or the United States debt dropped by, I think,
Sorry, I'm trying
almost
to
30%?
Wait, boomed when?
The Roaring Twenties. Do we need to go over the GDP?
Isn't
And
that right before the Great Depression?
the Roaring Twenties was a result of avoiding a depression, because there was one in 1919 and 1920. We had a large recession hit, and President Hardin, even in his inauguration speech, I can provide it, stated that they weren't going to do anything. The economy can fix itself. Grover Cleveland had the same thing, and when Grover Cleveland became president, the depression that had been going, or the recession that had been going on, since previous years, ended right after during his presidency.
The Roaring Twenties is what led to the Great Depression.
That's not true at all. The Federal Reserve becoming active in 1922 led to the recession in 1929. And even when it happened, the Federal Reserve refused to help and allowed it to go on for 20 years, over 20 years. The Federal Reserve could have ended it in 1933. All they had to do was the Roaring Twenties was a time to when even national debt was reduced by 30%.
The Roaring Twenties is when everybody liquidated their assets and put it onto the stock market because the stock prices are going up so much.
And again, this would have all been avoided. No, this could have all been avoided, and the recession would have corrected itself like it always does if the Federal Reserve had done what it was intended to. But no, the Federal Reserve actually caused more problems through banking. What do you mean how? They allowed 1/3 of the monetary supply to disappear. And then, along with Hoover, elongated these problems. And FDR caused those problems to happen even longer through the New Deal and other policies. We didn't see a recovery in the United States until 1957. The Dow Jones didn't recover until 1957 to 1929 levels.
Jesus, that's a lot of lava. Holy crap.
I thought the U.S. started recovering due to the start of the Second Great War,
No.
World War II, I mean.
Go look at unemployment and wages and stuff. How can you have a recovering market when nothing's for sale? They weren't allowed to sell anything. It was all going to Britain and France. There was no market.
That's how they recovered.
But they didn't, because
it was during
the economy didn't recover until 1957.
The war actually delayed the recovery.
Yes, wars typically do. They usually hurt economies, which is why we had a massive recession. Which is why we had a massive recession in 1919, which was prevented again by President Hardin coming in and taking the government and saying, "Yeah, we're going to lower taxes. We're going to do this, that, and the other," and not put our hands in the problem. And thus, the economy recovered very quickly, and we had the Roaring Twenties. And then Hoover comes in the office. Rolls out massive regulations on things like banks and other infrastructures, or not infrastructures, but the economy. And then we have the Great Depression happen. And then instead of the Federal Reserve coming in and saying, "Okay, let's fix this problem. Here, we're gonna create massive amounts of money. We're gonna print out a lot of money. We're gonna help these banks, so the banks can actually get this money out to the people they own." And this is a result of fractional reserve banking. These banks loaned out all the money those people had and couldn't even pay them their money. This is another instance of failed government via regulation, because these banks were mandated to have, or at least forced to have, fractional reserve banking through the Federal Reserve, which became active in 1922, even though they were created in 1913.
Okay, not having fractional reserve banking meant that banks were allowed to lend even more money.
The banks were allowed to loan money they did not have.
Yeah, and it created a bubble.
And that's not a bubble. That's them loaning out money they didn't have. And when people went to collect their money, there's a problem, right? When people collect money they don't have. So can you define a bubble in an economy or in a market? Because you keep using bubble, and I don't think you know what that means.
A bubble is when the price of a commodity is much higher than it's actually worth. For example, the tulip bubble. They used to have tulips ranging from anywhere between $5 and at the height as much as around $30,000. A tulip is not worth $30,000. And when you have an economy that depends on tulips being $30,000, The moment it stops being $30,000, then your economy collapses.
Okay, then now tie that back into you saying the banks have a bubble.
No, I said the
Where's the
stock
article?
market had a bubble.
You said the banks had a bubble. You said the banks have a bubble.
That would make no sense. I said the
Okay,
stock
then
market.
that's why I was asking. That's why I said, can you define a bubble? Because you were using it in reference to the banks having a bubble, which doesn't make any sense.
No, I was saying that like free lending practices caused the bubble.
Free lending practices cause the bubble? That's
Yes.
possible. That's
The
possible.
Roaring Twenties had a lot of lending for basically very low interest rates, and the stock market was going up a lot faster than those interest rates. So people basically liquidated their assets and they put it onto the stock market, and it led to wildly speculative investment.
Well,
You're
again,
talking about the Great Depression, right?
Yes,
Yeah,
the
well,
Roaring
Okay,
Twenties,
yeah,
Great Depression.
yeah. That is what happened.
but do you even know the variance of the lending rates in New York from 1919 to 1930? Do you even know the disparity? Because it wasn't very much. I think you're over trying to oversimplify this. Because I'll put it in general chat.
Go
There
ahead.
there was a disparity of at max 3%, and that was from 1920 to 1921, and that increase in interest for the banks actually helped the economy recover, right?
From what
That's
I
typically how economies recover, is let those interest rates build up, so it restricts capital a little bit. Therefore, inflation halts, and the economy can slowly recover.
No, but I think what he's saying is that the banks had low interest rates, and so that meant that people took out a lot of loans, and prices went up, creating a bubble, right? Is that what you're trying to say, Big?
yeah, that's what I'm saying.
Okay, yeah, that's true. That's how the Great Depression started.
The lower interest rates were a result of a booming economy. There wasn't a quote. So do you know how a bubble is actually created in this regard?
Yes, we do know. Yes, we're not
Yes.
disagreeing. That's also true. What you're saying is true. We know this.
Okay,
But the market crash itself is indicative of a bubble.
but the
because-
market crash wouldn't have been as bad if the government had actually done what it said it was going to do, and people were relying on the Federal Reserve to do this, right? That's why part of the speculation happened.
The 2008 market crash?
The 1929 market crash.
No, I agree with you
Oh.
there. I
The
think if the
people
government,
people had faith in the Federal Reserve. The banks did. So the banks had terrible lending practices, which are still enforced today with fractional reserve. So as a result, with all these loans out, when people came to collect on the money that they had accumulated, what happened?
They didn't have enough money to pay them out.
And what could have prevented this? The Federal Reserve could have given the banks the monetary supply they needed, which is why the banks did it in the first place, because the Federal Reserve had the money to give them. The Federal Reserve refused to do it, and they forced the market to crash as a result, because the market could have at least gone into recession like they normally do, in regards to things like this with bubbles. Bubbles pop. It could have recovered very quickly. However, the result was the Federal Reserve allowed 30% of the monetary supply to be deleted. A third of the banks closed. And as a result, the economy tanked massively because no one had money they had. All their money was just gone because of fractional reserve banking and the Federal Reserve refusing to do what it promised the banks. The only reason the banks
What
lended them...
exactly is that? So we're not clear on what exactly they promised. You keep saying that
The
they promised
problem... What do you mean the problem? The
No,
banks...
what they promised.
Promise. You said promise.
The banks... So the banks had... Well, no, the Federal Reserve promised to keep the banks out of trouble like that. Whenever there was any kind of problem with... Because they promoted Federal Reserve... or fractional reserve banking. The banks could lend out money, and the Federal Reserve was there to help them with money supply, to give them more money, right? That's what the Federal Reserve was for. That's why it was founded. What happens when the banks are like, okay, we need your help now because people are actually starting to come ask for the money we've lent out, and we don't have access to it anymore. Can you help us with the money supply? What does the Federal Reserve do? We can't help you. Well, now it's the whole point of the Federal Reserve in the first place, was to prevent this. So the Federal Reserve or the banks only lent that money out because the Federal Reserve had told them, yeah, this is what we're here for. And then they just kind of noped out and let it happen. It's hilarious. Milton Friedman got a Nobel Peace Prize on the subject talking about all
I think
this.
you're oversimplifying this.
I'm dumbing it down because that's effectively what happened. It's
Yeah,
demonstrably what happened.
But there were more variables than that. For example, if they did try to print out more money and then the money, it would increase inflation.
Inflation was already rampant. But again, it would have prevented the crash that happened if you at least printed the money and people had their money. It would have prevented that from happening. Then you would have had the federal government issuing subsidies out to farmers for them to kill off all their crops and all their animals, and people could still afford to buy them. So the inflation happened regardless. It didn't matter. The inflation happened. But that was a result of the flooding of the market. Not flooding the market. With
It was
all the capital being just destroyed, which should have helped with the inflation. But the problem is the government was forcing the inflation to happen via keeping rates artificially high on money. So no one could afford anything anyway. So at least those people would have had money to buy stuff, rather than losing a third of the monetary supply in the nation. And then, as a result, the government says, okay, well, we're just going to artificially keep prices high on everything so farmers and producers can keep their income. Which, in reality, they should have let everything tank a little bit, and the market typically recovers itself. We saw this in 1921. The same exact problem happened in 1921 and 1920.
The way I learned this in school was that
yes, school is typically wrong when it comes to monetary supply. They're very wrong. I can give you a great book on it.
What happened was, for a very long time, the stock market just kept on rising, and people were very confident that it would keep rising, and that created a bubble. But the problem was that these companies were not worth what their stocks were being evaluated as.
And see, it's not even that. It was so you could attribute a bigger problem to the rise of credit. People borrowing money that no one had. And then you saw people tossing credit into the markets, into the stock market. That's what caused the stock market to crash, because people couldn't pay up on their credit. And as a result, people started trying to pull money out of banks for security. And then the banks, through fractional reserve banking, were effectively doing what credit was. They were just pulling money out of thin air and giving it to people that didn't have it. Thus, you had a massive amount of inflation via those lower artificial interest rates because of fractional reserve banking. Fractional reserve banking causes artificially low interest rates. Then you had people trying to pull the money out to feel more secure because the stock market was dropping. There was no money there because of fractional reserve banking. As a result, you had everything crash, rather than the Federal Reserve saving the banks in this instance, which is what they were planned to do, which is why the banks loaned like they did. And you would have avoided this entire mess as it started. You could have ended it in 32 and 31.
So you're suggesting that this would never have happened if we did not have fractional reserve banking, if we did not lend out that much
there
money?
There are more factors which I just outlined. Fractional reserve banking, the Federal Reserve, and credit are three of the big factors that caused the stock market to crash and resulted in the Great Depression. If the Federal Reserve had have done what it should have done, it would have eased all this, and we would have had a bad recession, probably. But recessions are there to help fix the economy.
The problem is we got stagnating wages.
Well, yeah, stagnating wages are a result of massive inflation. Inflation where growth doesn't keep up with inflation, because inflation's so high, you're going to have increased prices of commodities and goods, and the wages aren't going to keep up as a result because of inflation.
Well, I mean, if you look at it with respect to productivity, though, the wages should be increasing relative, but they're pretty much the same. They haven't increased, relatively speaking,
because of the massive amount of inflation and price fixing. If you didn't have price fixing and inflation, the power of the dollar would be there, and those wages would reflect. They wouldn't need to rise as fast as you think.
So if you don't have wages, you're not going to have labor, so you're not going to have inflation.
But again,
you have too much labor, so you get inflation.
Inflation isn't a result of too much labor. Inflation is a result of an increase in monetary supply that doesn't reflect growth.
Yeah, that monetary supply is created by labor.
No, the monetary supply is created out of thin air from low
Well, I
and,
know,
and
but I'm
zero
saying
interest
that
rates from the Federal Reserve into these banks, and then the banks are able to do fractional reserve lending and then create wealth out of nothing. That is what causes inflation. And we saw that. We even saw this in the Civil War.